Welcome to our next budgeting discussion with the materials budget. And this is completed after we've completed the production budget. So we have to know what units we're going to produce before we know what materials we need to purchase. Now, this one it's very similar to the production budget because of the idea of the beginning and ending inventories. So if you're able to do the production budget without too many concerns, you'll probably be all right with the materials budget. There is one additional level of complexity with the materials budget, and that is the fact that we now add a cost per unit for each of our materials. And the other, complexity is that any given product might need 2, 3, 4, 5 different types of materials, so you have to consider that as well. You may end up needing to do multiple materials budgets. So just keep that in mind. But the biggest thing there, the biggest trick to productions and materials budget is that beginning and ending inventory concept. So here's the illustration I've been bringing up in the past several budget discussions, the past few. We start off with the sales budget, and that leads us to the production budget. We know how many units we need to produce. Now that we know how many units we need to produce, we can complete our direct materials, direct labor, and manufacturing overhead budgets. Those are the budgets that relate to the cost of actually producing products. Now, again, we'll talk about the other budgets later on, but these are the three that we're really at this point. For this lecture, it's the direct materials budget specifically. So, as I mentioned, one of the main differences from the production budget is that you may end up having multiple types of materials that you need. Plastic, rubber, wood, steel, whatever types of materials you're talking about. And you also have to worry about the quantities of those materials needed. So with the production budget, it was just a flat unit. 1 unit was 1 unit. But here, with any individual unit we're producing, we may, for example, need 3 pounds of plastic, let's just say, per unit. So we have to keep that in mind. There's one more level to multiply, and there's also the element of cost that comes into play. So we could be talking about pounds, feet, ounces, yards of materials, whatever we're dealing with, cubic feet. That's what our material is measured in, and then there's going to be a price per pound that we have to track. So those are the additional levels of complexity with the materials budget. Just like with the production budget, we need to know the company policy on inventory maintenance. What do they want their desired ending inventory to be at the end of the period? And remember, that also carries forward to next month's beginning budget or beginning inventory. Now, that whole desired ending inventory is often just a percentage of next period's expected production needs. That's different than the production budget, which was a percentage of next month's sales. With the materials budget, it's generally a percentage of next period's production. So, again, the whole point there is we don't want to end up the year, we don't want to run out of materials, first of all, for this month, but we also don't want to start production on day 1 of next month and not have any materials to start with. So those are all important things to consider. Remember, just like with the production budget, yes, we calculated ending inventory, but that same ending inventory number rolls forward to become the next month's beginning inventory. So that's how we get that number. We don't need to separately calculate beginning inventory, although we usually can by just taking the current month's production needs and multiplying it by whatever we expected to have at the end of last month, whatever percentage. So we'll see that in the example in just a bit, which is right here. You'll see it's a little more complex than the production budget if you recall that last lecture. But what we have our quarter, April, May, and June, and then we have our quarterly total. So in this case, we have the budgeted units that we wanted to produce. This came from the production budget. So that's the important thing. It has to come from the production budget. And then we want to know how many pounds of a particular material. We don't really get specific and talk about what material. You can put in plastic here. Let's just say it's so many pounds of plastic per unit. So every 1 unit we produce takes 7.5 pounds of plastic. Now, generally, this would remain the same throughout the quarter, unless you've redesigned the product, which is a whole different situation. Now, this tells us that just for the production goals, which remember those production goals included not only sales, but whatever we wanted to end up with as desired ending inventory. So these are the units we have to produce, and that means we're going to have 7.5 pounds for each of those units, which gets us obviously quite a bit of a higher number. 78,000 pounds of plastic for April, 139,500 pounds for May. The 366,000 is indeed a total for all 3 months in that quarter. But as I said before, we have a desired ending inventory here, which, as you can see at the bottom, is 20% of the next period's production needs for materials. So our desired ending inventory for April is going to be 20% of May's production needs. So 139,500 multiplied by 20% is going to be this 27,900. We always have to look forward to get our desired ending inventory. But remember that 27,900 of April's ending inventory moves forward to become May's beginning inventory. So for one number you're looking forward to get production needs multiplied by 20%, but once you get that number, you also move it forward into the beginning inventory because that's what you're going to start with next period. So again, usually the numbers, you're dealing with 2 different months at a time, going back and forth, but at any point in time, especially the first month of a quarter, if you need to decide what your beginning inventory is going to be, all you have to do, again, that would have been March's ending inventory, but we don't know March. So to find the exact same number and to find it the same way we would have for if we were calculating it as beginning inventory for March, we just take April, which would have been the next month. We take April's material needs, 78,000 pounds in this case, and we multiply it by 20% to get our 15,600. That's what we would have done if we were doing this in March. We would have taken 20% of 78,000, and it would have been March's ending inventory, and we would have moved it forward to become April's beginning inventory. Again, that assumes that everything went according to plan, which isn't always the case. But absent the textbook giving you the actual number, you're going to have to calculate it this way. Now, if you add up material needs for the current month, minus or if you subtract the beginning inventory from it, you'll tell what materials you need to purchase. So remember, we had 7.5 pounds of materials for each unit. Now we need to know a cost per pound. In this case, it's $2.50 per pound. So 90,300 pounds multiplied by $2.50 gives us $225,750 of materials we need to purchase. That's going to become important when we get to the actual cash budget and all of those budgets, because we need to know the dollar amount there. So when we talked about production units, and when we talked about the production units, we really didn't deal with a cost amount. And the reason for that is that we didn't know what the cost per unit was at that point, because we hadn't done the materials budget, the labor budget, or the cost of goods sold budget. You guys, we need to know that. So that gives us the cost of materials for each of those months. We add it up, we get $936,000. Now, again, the reason we needed July, you may recall in the sales and production, we had July sales and August sales. We needed that because we needed to know what July's production needs were going to be. So we don't have August here because we've already calculated this for July. 16,000 units to produce in July, and multiplied by 7.5 pounds gives us 120,000 pounds that we need for desired ending inventory in July. So that's what's going on there. And when I say desired ending inventory, I'm sorry, that was actually July's current production needs, you need that number to multiply it by 20% to get June's desired ending inventory of 24,000 pounds. So that's where you need that number for. So that takes us to the end of this lecture for materials. Again, this all rolls up to the production budget. It supports the production budget because these are the actual costs of what we need. The next two we're going to discuss are the labor budget and the overhead budget. The materials budget is probably the more complex because it deals with beginning and ending inventories, and it deals with a cost per pound, a number of pounds per unit, all of that. So thank you for your time, and I will talk to you in our next budget discussion. Thank you.